Hey guys, thank you so much for watching this video. Please give us a call if you guys are looking to improve your credit score, lower your car payment, buy a car, trade in a car. If you're looking to purchase your first home, if you're looking to purchase a rental property, we can help you. Give us a call today, 877-205-7771. Talk to you guys soon, and thanks again.
Hello everyone, this is Calvin Russell, CEO and founder of FICO Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about how to lower your car payment with a personal loan, or pay off your car essentially with a personal loan. So now, why would you want to do something like this? Well, a lot of banks, when it comes time to paying down your vehicle or trying to refinance your car, a lot of banks have a cutoff. Most of the time that cutoff is either 5,000, 6,000, 6,500, 7,000. Usually it's somewhere in that range, about $5,000 to $7,000, and that's a minimum amount that banks will finance for an auto loan, whether it be an auto loan or auto loan refinance. Okay, so you're probably saying to yourself, well, why would I get a personal loan when I can just refinance it? Well, because the amount that you owe may fall into that unqualified amount, so now you're kind of stuck. And I see it all the time. People have like a $6,000 balance on a vehicle that they're well overpaying for with old contract terms. Their credit score has now gotten a lot better. Okay, and so they probably only got like 3 or 4 years left, but they're paying this astronomical payment. So now what you can do is you can just get a personal loan, and then of course take that personal loan, use that to pay off the auto loan. Now you have better terms, a better interest rate, and then sometimes everything's better. So for example, you may end up lowering your payment and keeping the term the same. You may end up of course keeping the payment the same, and then of course just lowering the term, or in some cases you can lower the payment and lower the term. That means you had a real messed up deal. Or that sometimes the number just work out a lot better. And then the great thing about a lot of these personal loans that are out there, again, usually when your score gets to the point where you can qualify for things like that, 620, 630, 640, 650. Of course, the longer you wait for your score to go up, the better the terms will be with the personal loan people. The great thing about it is a lot of them do soft pulls. Okay, so even if you can't do a traditional auto loan refinance because the balance is so low they won't refinance the vehicle, or for whatever reason the miles are too high, or whatever the excuse is, you can take out a personal loan, and if you qualify, you may qualify for 13%, 12%, 15%, whereas your auto loan was at 23%. So those things make a major difference. You want to make sure the majority of your monthly payment is paying off the principal as fast as possible without having to double up on payments and all the rest of this stuff, because there's a lot of crazy fees where you'll have a car for 6 to 12 months, 12 to 18 months, and you're not seeing your payments go anywhere. A lot of times that happens because the interest rate is so high at the beginning. That's why it's these little windows of time to refinance your car as soon as possible. But if your balance is low or your miles are extremely high, you have to really improve your score and take out a personal loan and see if those numbers work out for you. And a lot of these banks are now doing soft pulls, so that just makes a lot of things easier for you. So hopefully that's helpful. Again, only do this if the numbers make sense. Don't just go do it because Calvin says go do it. You have to make sure that the numbers make sense. Okay, I had a client who's paying $480 a month, and his balance was $6,000 left, on the vehicle, and I think he had like 2 or 3 years left. I'm like, dude, you can just take out a personal loan, pay that car off. Technically, you still have the car, you got the title, but you're paying for it. It just makes it a lot more easier, because especially if you're gonna, if you plan on paying for it anyway. Okay, so now one thing that he could have did, because you don't want to mess this situation up, where you take the personal loan, you pay off the car, now you go trade in the car. They see that the auto loan is now paid off. They don't care about that personal loan because it doesn't say that it's attached to the auto loan. Now you got the auto loan, you use that equity instead of it being going towards the actual vehicle. The actual personal loan that you took out. Now that equity now goes as a down payment into the next vehicle. Now you got 2 payments. Now you got the old car payment that's essentially a personal loan payment, and then you also have the new auto loan payment. So just make sure that you let them know, hey, listen, I refinanced this with a personal loan. They'll be able to see, of course, I need to make sure that we can pay this off. all they need is, they just need an address to do the payoff, and that's really essentially what they're going to be having to do. Okay, so again, just let the dealership know if you end up doing that, but they don't care who they write the check out to, as long as things are paid off, to make sure that things are whole. But give them an update, because people do refinance or pay off their vehicles or restructure their contract terms with a personal loan instead of doing an auto loan refinance. So hopefully that wasn't too confusing. Okay, so but either way, if you like this video, like it. If you want to share it, share it. And as always, be sure to subscribe, as we have nothing but great content on the way. Thank you guys so much. Have a great day.